Welcome back to the Real Estate Wealth Care Academy. I'm Jim Henneberry, and I'm also known as the Wealth Care Guy. This is video number 2 in our series of Should Ask Questions. And today the topic that we're going to cover is what are the financial benefits that real estate offer? In my mind there's 4 main ones, and when combined correctly, real estate can be a fabulous investment. The first one that we're going to cover is rental income. Now, not many people know, but 29% of Australians decide to rent homes. And what's feeding this as well, because it's growing all the time, is that the population growth in Australia is growing by a net person every 92 seconds. If you look at the slide that's up at the moment, you can see that the counter is showing you that the Australian Bureau of Statistics reckon that our growth in Australia is by 1 person every 92 seconds. The second financial benefit is the tax deductions. Now, I've covered this quite comprehensively in the frequently asked question video number 2, but I'd like to elaborate a little bit on another tax deduction you get as a property investor, and that is depreciation. Certain buildings are allowed to be depreciated over 40 years of their lifespan. So if you have a $200,000 dwelling on your property, over 40 years, you can depreciate that by 2.5% or $5,000 a year. And there's also depreciation allowed on chattels, which are things like your carpets, your curtains and your light fittings. So if there is $10,000 worth of chattels in your building as well, an average depreciation rate is around 12%, so there's another $1,200. With the building depreciation and the chattel depreciation, you get an extra $6,200 per annum tax deduction on a property like that. The third financial benefit, of course, is capital growth. And you're looking at a slide here that the Real Estate Institute of WA has provided to me, and it shows you the capital growth of properties since the 1970s. Over that time, where real estate has gone up to an average of $450,000, the average growth rate has been 7.5%. When I entered the real estate industry, an average price or a median price of a home was $38,300. So when a $450,000 property goes up by 8.5%, you have actually got back your $38,500 100%. And I'm going to ask you a question here to explain the magic of compounding. And what that is if I was to offer you $1 million today, cash, tax-free, or 1 cent today and double it tomorrow and double it the next day and double it the next day for the next 31 days, what would you decide to do? Take the $1 million today or take the 1 cent with the compounding and doubling effect every day? Well, if you look at the slide on the screen now, what's actually happening is your 1 cent doubling effect, by the end of 1 week, you've got 64 cents in your hand. By the end of the second week, on the 14th day, you've got $81.92. Nothing impressive about that. But go forward to the 21st day, 3 weeks into the month, you now have $10,485 in your bank. Go forward another 7 days to the 28th day, you now have $1,342,172. It's interesting what happens past then. Day 28, day 29, day 30, day 31, you have $10,737,000 in the bank because of compounding. So don't underestimate compounding effects that property has, because when people say your property's gone up 7.5%, what does that mean based upon when you purchase the property? The fourth element is what we call gearing. Now, a definition of gearing is controlling a large asset with a small amount of your dollars. In the slide you're looking at now, you have a $400,000 home being controlled by $40,000 or 10%. When that property goes up by 10%, that $40,000 capital growth is 100% return on your money. So these are the 4 financial benefits of investing in real estate. When they are combined correctly, real estate is an absolute fabulous investment. Please visit us at www.realestatewealthcare.com.au, and if you have any questions for us, you can email me, jim@realestatewealthcare.com.au, and I will reply to you. Thank you.
you.